Kittusamy, and I'm an instructor here at UNR Extension's Small Business Education Program. Today's class, we got something super exciting. It's going to be on Intro to Small Business Finances. Before I get into the class, I'd love to provide some extra resources for you, the viewer, to access. So first up, one of those resources is going to be the playlist that we have right here on YouTube, as well as on our actual website, which has a virtual classroom on there. And some of these videos that we cover in this virtual classroom, this playlist is covering our 5 main categories, which is finances, operations, management, marketing, and startup. These 5 categories are what we focus on primarily when teaching classes, both online, virtually, through video format, or through Zoom, as well as in person. We are a program that is based here in Southern Nevada, so if you live here in Southern Nevada, we would love to come in and get more context to some of these classes we have recorded, as well as future classes that are not even hot yet, as we have a good amount of teaching instructors that are going to be completely new that we don't have videos yet for. I would highly recommend coming in person and absorbing the knowledge that we're teaching at those classes. And furthermore, the other cool thing is that you can ask questions. So you might have questions in this video. I highly recommend putting them down in the comments and we'll try to get back to you. But if you do come in person, you'll be able to get those questions answered right then and there. So with that being said, those are just 2 of our great resources, as well as our other great resources, like I said, is those physical classes, which you can find more information on our website. If you do want to access our website, I'd say the best and easiest way to do that is just to go to Google and type in UNR Small Business Education Program. And again, it's UNR, so UNR Small Business Education Program. It's going to be the first search result. You click it, and you can see a bunch of our different resources, as well as the links to the right resource that you need. So if you're trying to look for upcoming classes here in Southern Nevada, there's a link for that. You can see all the different classes we got coming up for that month. Again, we have classes in all those 5 categories. So maybe you want just finance classes, we got that. Maybe you just want startup content, we have that as well. So feel free to also scour our playlist as well as our virtual classroom to see more content, as we have tens, if not hundreds of videos covering topics in those categories. So with that being said, let's get into today's class topic, which is Intro to Small Business Finances. This is a really core class. It's really going to give you just the base routes of finances with your business. And it's really going to touch surface level, and some of the concepts we're going to be talking about have additional classes that go more in depth. And I will mention those parts once we get to those parts in these slides. All right? So first up, let's go over what we have on the agenda. First up, we're going to be talking about basic accounting principles. I think you have to have a solid foundation of the different accounting principles that are out there to understand all the other things we're going to be talking about. More importantly, there are 2 main accounting principles that you're going to need to focus if you're trying to be successful with your business. So we got basic accounting principles, understanding financial statements, budgeting for small businesses, cash flow management, financial planning for growth, and obviously we're not in person, but if you were in person, we'd have a Q&A session for you to look at. All right? So, first up, why is it important? Well, I believe that strong financial management is crucial for ensuring a business stability. It's going to enable you to make informed decisions, foster growth, and protect yourself against any financial risks out there. All right? So going more in depth, first up was ensuring sustainability. proper financial management helps businesses maintain stability and longevity by ensuring resources are allocated efficiently. It's just like a warehouse, right? If you don't know what's going on in that warehouse, you're not going to be the best logistically when you're trying to ship certain products out. You have a system in place. You have safety nets. You have accountability. This is what financial management is. It's making sure you're sustainable as a business so that you can make the right decisions, which we'll go to next, as well as kind of know what's going on in terms of things like runway if you have investment for your startup. So financial management is really important, ensuring sustainability. Next is helping in informed decision making. Financial insights guide small business owners to make smarter, data-driven choices that align with their goals. I personally have had a startup in the past. We went to market, I had a team, and with the specific financial information I had, I was able to determine things like, okay, we made this much and we're trying to get these many customers next to acquire, so we're going to need to spend X amount in marketing. And we'll be able to pay that back off, from what we've spent after gaining X amount of revenue from the customers we have already acquired. So it really helps determine certain things. Also can help determine specific pay that you want to give to specific employees. Maybe you have a sales team. And so depending on, data that you have in regards to your finances, you'll be able to determine things like, can I give bonuses this year? Or can I reward extra stock to my employees or to my shareholders if you are a company that's trying to go public? So it will help inform many decisions and goals. Speaking of goals, the next one is prepare for growth and scaling. Effective financial planning really sets the foundation for expanding operations and scaling sustainably. So going back to that point of sustainability, with financial management, it really is linked to the goals you set as your company. Now, if you don't have goals for your business, I highly recommend taking a whole day off, not even working on your business. I just want you to brainstorm goals you have for your business within the next year, 5 years, 3 years, 10 years maybe, and really just put that down and kind of help set yourself up for success or your team up for success. And that ultimately is going to make sure you lead a sustainable path just from business development. This is where financial management is also tied to it, because certain goals might require you meet certain financial milestones, right? So with growth and scaling, it's really important that if you want to grow, you have to make sure you have your finances in check, all right? And you better understand what those different things are, which we will be covering in today's video. Again, lastly is avoiding financial pitfalls. Understanding financials will help you identify and prevent costly mistakes that could jeopardize the business. So many things like a pandemic, which we just experienced. If you didn't manage your finances correctly, or even just know what's going on with your finances, you might go under. You might go bankrupt during big cataclysmic events like a pandemic. But more on the micro scale, not the macro, right? The micro scale. If you don't know, like if you're pitching to an investor and you don't know your finances, they're going to crush you. They're going to see a weakness and they're just going to go for it. So knowing your finances really helps you in all different areas. And it will essentially make sure you don't fall into those pitfalls that, someone who isn't prepared with their finances would go through. All right. So these are the 4 main areas that basically describe why financial management is important. All right. Now we got that out of the way. Let's keep going. 2 basic accounting principles. So this is our first concept we're going to be talking about. We got two main methods. These are the main methods that are followed across the world. There might be variations of this depending on the different country and whatnot, but for the most part, these are the two main accounting principles, especially here in the US, all right? So first up is the cash accounting. So the cash basis method really just records revenue expenses when cash is related to those transactions and when it's received or dispensed. So whenever you transact something, that's a transaction. Whenever you receive something, you transact that. So when it comes in and out, that's basically cash accounting. The cash basis method is, I would say, generally used by sole proprietors and smaller businesses. So if you're a little bit more low-key with your business, I'd say it'd be, I think cash accounting is a lot easier to get around. It's much more logical from the get-go. So if you just want to get something going, go with cash accounting, all right? However, if you do want to be set up for success, I highly recommend you learn accrual accounting, as this is what most of the world uses, especially here in the US. So accrual accounting provides a more accurate view of company's health by including accounts like accounts payable and accounts receivable, all right? The accrual method is the more commonly used method by larger companies, especially by publicly traded companies, as it basically smooths out earnings over time. I believe with cash accounting, you can do things like you can manipulate specific items on your different financial statements, and you can kind of get away with certain things. But if you do want to become a publicly traded company, that's not going to slide, and it could actually get you in trouble with the SEC. Accrual accounting is just a lot more accurate with what's happening with your company financially. Okay. I'd say if you plan to grow your business and want to make sure you're set up for success, like I said, accrual is going to be the way to go, as it follows GAAP rules. That's one other thing I want to mention about accrual. So all in all, cash equals simpler. Accrual equals more complex, but a lot more accurate to your business. Okay. Another concept I do want to introduce is the accounting equation. So simply, assets will always equal liabilities plus equity. The accounting equation is the foundation of a company's financial position, representing what the business owns, owes, and the owner's stake. This essentially will show the company's financial health. It basically drives this equation drives all the financial reports by ensuring that every financial transaction maintains balance, affecting the company's financial health. An example of transactions affecting balance could be purchasing equipment with a loan will both increase both assets, so an equipment category under assets, and a loan payable category under liabilities. And this will essentially keep the equation in balance. If it is out of balance, you better go check your math, right? It always has to be in balance, okay? Assets must always equal liabilities plus equity. Now, you can manipulate the formula in a way if you are missing a specific section or categories numbers, but I would just stick with this equation from the get-go. A lot of the modern tools out there, digital tools, already make sure your financial statements are already in balance. So you don't really have to do a lot of extra math. It auto-calculates a lot of that stuff. However, I would highly recommend you just have this in the back of your head, as technology can also mess up. So just keep that in mind, all right? So now that we kind of look at the basic accounting principles, cash and accrual accounting, as well as the accounting equation, now we can look at understanding financial statements. And there's really three main financial statements. First one is the income statement, otherwise known as the profit and loss statement. This provides a breakdown of a business's revenue, cost of goods sold, gross profit, and operating expenses. This is ultimately calculating the net income as the difference between revenue and expenses. The second financial statement is a balance sheet. This offers an overview of a company's financial position by summarizing its assets, liabilities, and owner's equity at a specific point in time. The third and last financial statement is the cash flow statement. So both of these two statements covers everything except for cash coming in and out of the business. And you really need a statement to cover this. And that's what the cash flow statement does. It tracks the inflows and the outflows of cash over a period. And this is going to show how cash is being generated and used within the business. So we still maintain elements of that cash type of accounting principle, but this is a statement just dedicated to cash coming in and out, all right? So I want to show examples of these statements. This is what an income statement looks like. As you can see, we have gross profit, operating income, and as you can see, I believe you can subtract these items and you would essentially get your net income, okay? Very simple, very easy. Again, a lot of those tools out there, especially accounting tools like QuickBooks, it will auto-populate all this stuff. If you did also want to be on the cheaper side and the more MacGyver side, you could always get an Excel pre-made template or even create something yourself, and you can just follow some tutorials online and you can create all this on Excel pretty easily, all right? Now, this is what a balance sheet looks like. As you can see, we have assets on one side, on the left side, and you have liabilities and equity on the other. Again, this follows more of that accounting equation, and this is where you're going to be seeing if your assets will equal your liabilities plus equity. So this is where you're going to see if it's in balance, which is why it's called the balance sheet. All right. Next up is creating a simple budget. So the main three categories I want to showcase to you guys is revenue projections, expense estimation, and profit margin. So first up is revenue projections. This is just essentially a forecast, a sales forecast based on past performance or market research. So if you're just starting out your company, or if you have a startup and you're creating a pitch deck, or you're getting investors, or you're just trying to see if this is even a right industry to be in, or even adjusting certain costs or expenses or whatnot, this is going to be key. And if you've never started your business before, the revenue projections are projections, so they're just estimates. The more data you have, the better. But if you have no data at all, if it's a completely new industry or idea, create some estimates and be very conservative with your estimates, as you don't want to be disappointed. Let's just say that, all right? I always recommend when you're doing revenue projections and you don't have any data and you're just doing estimates, be a little conservative, all right? Next up is expense estimation. So make sure you're categorizing fixed versus variable costs. This is going to be really key when determining expense estimations, all right? Profit margin's the last thing to creating a simple budget. So what's your percentage of profit after all expenses? With these three main ideas, you're going to be able to know what type of budget to create, all right? So next up is cash flow management. Cash flow management is crucial because it ensures a business has enough money to meet its financial obligations, which can ultimately make or break its success. So, what does this mean? First, we're going to look at cash inflows versus outflows. The main concept with inflows and outflows, because this is the key concept of cash flow management, Again, inflows are coming into the business. So this is cash coming into the business. Outflows is cash coming out of the business, okay? That is basically just highlighting the net movement of cash of your business, all right? So that's the core concept of cash flow management. Also with cash flow management, you want to make sure you have the timing of payments and receipts figured out. So managing your cash flow effectively, ensuring that payments are made and receipts are collected at the right times to make sure you maintain liquidity. Okay. So, how can you improve cash flow? So, let's say you're a business already in business, right? You might have done your cash flow management. You might have already calculated what's coming in and what's coming out. Well, now, how do I improve it? And there might be certain metrics out there for your industry to know if you're doing well with your cash flow management or not. But if you do need to improve your cash flow, here are 3 ways to go about this. First, increase receivables. So quicker collections, offer discounts for early payments, reducing expenses, so trimming unnecessary costs, and negotiating with suppliers. Okay? And that's where knowing what your fixed and variable costs is going to come in really handy. The third concept is shortening inventory turnover. So with cash flow management, that's also married to inventory management. So making sure to create efficient inventory management is going to really, really just hike up that improving cash flow metric. Okay. Now, I did mention that one of the concept is growth with your with financial planning and your budget. Financial planning for growth is strategically managing resources and investments to support and sustain business expansion while ensuring long-term financial stability. So, strategic financial goals. Scale your operations, invest in new opportunities, and manage debt while leveraging financing options to support sustainable business growth. Also, another cool thing about financial planning for growth is monitoring performance. This is personally my favorite action when financial planning for growth. This is just regularly reviewing financial statements and adjusting the budget and cash flow management as needed to ensure financial stability and growth. So now that you have your goals, right, and this is where if you don't have them, because first you need your company goals, then you can work backwards and get those finance-specific goals. Once you get your financial goals, you can then, and you have your company's goals, you can then marry those together and you can have a better time at monitoring the performance ultimately of your company, right? Because the company's a main way to know if your company's doing well is its finances, right? So with those financial goals, it's going to help you monitor your performance of the company. And make sure you're meeting those goals too, because just having goals is great, but if you're not holding the company and your team accountable, you're not going to be there much longer. Let's just say that. All right. Lastly is tools and resources we have that I have collected throughout the interwebs, and I've also experienced some of these tools and resources for small business finances. First is that accounting software, so I look at things like QuickBooks, Xero. I would also look at financial advisors and accountants. So if you're really struggling with doing this yourself, I would highly recommend contacting these professionals. I would also recommend you just if you could choose any one of these, I would choose an accountant because you have to file taxes most likely, and accountants are going to help with that. And business taxes are a little bit more complex than personal taxes, and it just gets even more complex depending on what business structure you are. And then some other tools and resources that I did mention were templates for budgeting and cash flow analysis that you can just find online. Most likely someone probably has created something like that on Excel, and you can just download that and play along with it. But with that being said, if you have any questions, feel free to put that in the comments. We'll try to get back to you. But like I said, coming to the physical classes will just be a lot more beneficial for yourself. And the classes are free, so you don't have to pay anything. That's one of the coolest things I always like telling people. Is I teach classes. I get paid to give free classes to individuals. It's probably the most rewarding thing. So I would highly recommend you come to any of our classes in person. You can find that on our website, which is, again, you just type in on Google, UNR extension small business education program. Will be the first link. Anyways, guys, thank you so much for coming to this video. If you'd like to contact me for more information, here's that little QR code for you to scan. With that being said, I'll catch you guys